Hello everyone, from Chicago. I'm Portfolio Manager Charles Brown at CB3 Financial. CB3 Financial is a family office basically where we trade our own in-house assets as well as select clients who want to invest with us side by side, basically following the same strategies that we follow. You can check us out at cb3financial.com. If you click the button on the left, you'll be able to create a risk tolerance profile to see if what we're offering is appropriate for you. On the right side, you can begin a financial plan creation, which we can assist you with, or you can do it on your own. What we're showing you here now is our growth program. We call it CG, or capital growth. So far year to date, up 25.2%. You can see the big downturn. Obviously, we've pulled back since the last episode here, but we're still way ahead of the S&P year to date. And the whole point of my Daily 5 program is to show you how we use stock charts to make money for our clients. So let's get into that right now. All right, so year to date, Nasdaq up 20.6%. S&P under 2% now. Dow is back to being negative 5%. Russell down 11%. So the first thing to notice is the huge gulf between the Nasdaq 100 or Nasdaq Composite, which is different than the Nasdaq 100, obviously, and the Russell 2000, which is about 31%. Okay, it was actually larger than that just a few weeks ago before we started this pullback after new lifetime highs were set on September 2nd. So what does this mean? What this means to me is I really can't use the S&P 500 as a benchmark for making my selections because that's aiming too low. So what we like to do is see who's performing the best and then use that as the dog that's leading the horses, so to speak, to make them run faster. All right. So this is a composite chart. I love the feature in StockCharts where you can compile, multiple indices on one chart. So we've got the Nasdaq 100 NDX, the SPY, which is S&P 500, of course, the industrials, and then IWM, which is representing the Russell 2000. And you can clearly see up over a trailing year now. So this is 1 year trailing. So we get the move up to the February 19th high, and then the harsh sell-off down to March 23, and then the strong recovery by the Nasdaq 100. And that's the reason that we've chosen this index to use as our benchmark, if you will. Now, our client accounts still use the S&P 500 to represent their account comparisons, but we don't want to aim that low. We want to aim higher. And if you zoom in on this chart, just since the pandemic, so this is since the March 23rd low, actually the Nasdaq has performed even better. The other indices have not done quite as badly as they have over a trailing year. But what this shows me is, and again, I keep all of these on the left-hand side, the presets there, because I want to be able to quickly review this every day to see, look, are we still on track using the Nasdaq 100 as our go-to for what we want to beat? Sure, we want to beat the S&P 500, and when it is ever the number one performing index, which candidly has not been the case in quite some time, but if it ever was, then we would go back to using that both for the internal benchmark as well as the external benchmark for our clients. So I like being able to have these presets, as I said earlier, in stock charts. What are we going to look at next? Well, where are we in the context of this bull market? All right, so let's go back 10 years, and I use the 200, the 50, and the 20-day simple moving averages. I don't use exponential. I think it's more accurate, especially on long-dated charts like this, to be able to see support and resistance over, if I want to check here, go back and see 2016. I don't want to use an exponential because it's going to bias the most recent data. So on a weekly chart, I am seeing these points touch this 200-day moving average and then rocket off of that. And when I look at the top, you'll see the yellow highlighting there. What this tells me quickly, and I'll put this on the charts, I'll actually go in and put color on the charts so that I can come back to it and know what I was thinking at the time, which is, okay, so yes, obviously September 2nd was the recent high. And we're in a pullback now. As I mentioned earlier in this program, it's approaching 10% in the S&P. We'll see what happens tomorrow. As I record this, we had the first market day after the announcement that Ruth Bader Ginsburg had passed away, and there will be a vicious fight in Washington over her replacement. That's in addition to all the other medical and geopolitical things happening. So these are things you have to be aware of, obviously, as a portfolio manager. But I'm not seeing even a threat yet to the 20-week moving average. That's the green line. I think that you're going to see buyers come in there. And we saw it at the end of the day today. This is Monday. And again, we'll see what happens tomorrow. But I'm using that as a benchmark to say, I think we're in pretty good shape here. This is a chart that I use on a regular basis to monitor where we make our next decisions. So the next thing I do is call up the S&P. And of course, these are relative rotation graphs for those of you that may not be familiar with it. This is looking at stocks or indices or other asset classes in 4 quadrants. The leading, which is in green there, which means it's beating the S&P or whatever the benchmark is. In this case, I'm actually using the S&P. And then weakening, which means it's still beating, but it's losing some strength. The pink or the red is lagging, and then improving is in blue. So I'm using the S&P as a benchmark here, and what I want to see is how are the growth stocks versus the value stocks. So IWF, which you can see here in the lower right-hand corner, is in yellow, which means it's weakening. It's still the farthest on the RS ratio scale, so it's definitely the best performer, but it's weakening. And interesting, coming into the leading quadrant is the small caps. So people say, well, if you're a growth and momentum trader, don't you really want to see all the sectors performing well, all the different asset classes? And the answer is yes, I absolutely do. So this is a positive, even though we're not really invested that much in small caps right now. But going forward on a daily basis, I don't see anything contradicting this. The Dow and the value index and then the Russell are moving toward the leading quadrant, and IWF at the bottom is taking a pause. What this is telling me is it's okay because the other asset classes are now reaching a point where they're contributing more to the overall market performance. I then drill down and look at the various sectors. And what am I seeing that I like? Well, in green, I see discretionary, I see materials, and I see industrials. Now, industrials have kind of disappointed over time here, but they've moved in, and we'll see if they can hold. What I'm really trying to determine is, do I want to allocate some assets towards that? And my determination right now is I'm going to wait and see. What I want to do is drill down into discretionary and see what I've got here. Well, we already own Target. We own CarMax, and we own McDonald's, which you can see is improving. But are there any other constituents here that really interest us? Well, Target, possibly, yes. Okay, as I said, we already own that. Bed Bath & Beyond, or Best Buy, I should say, BBY, something that we would look at, although it's already starting to fail a little bit in strength. But the other sector that interested me that hasn't been in play in a while is actually, I went too far there, let me go back, is materials. So look at these individual constituents here, and the way that we have chosen at this point to participate in materials is with SLV. That's the silver ETF. We're not doing individual stocks because candidly this sector has been such a disappointment for so long that we just decided to play this with silver. And we have a 5% allocation in the overall portfolio in silver, which is outperforming gold. We've had gold in the past, but for now we are sticking with silver. 40% technology, 23% in consumer discretionary, with the balance of the assets in XLV, XLY, and XLC. That's what makes up the current allocation of our portfolio. If you have any questions about this going forward, you can find us at cb3financial.com. Be sure to subscribe to us on YouTube and watch our programs on Monday night and Thursday night. And of course, we tweet on Twitter as well. Really appreciate you being part of this program tonight. Your Daily 5 is a way to show you how to use stock charts for Portfolio Manager. I'm Charles Brown with CB3 Financial, where we don't just manage your assets, we become one of them.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.